So hello, everybody. Welcome to another episode of Mortgage Madness is the name that
All right.
this crazy, awesome marketing guy came up with. We're going to dive into the world of lending and real estate. I did nothing. It's delegated that to Jay. Jay's awesome. And we're doing everything in between. So I'm Shane with branch manager with Branch Mortgage. And we got Danny over here, special guest. And you think maybe you could take over the podcast. I don't know. So you came in, you said, I want to wing it. And then Jay was like, dude, you're going to have an outline. So I don't know.
Thanks for having me. I'm Danny. I'm a realtor.
Yep.
Me and Shane have been buddies a long time. He's the only lender I refer. He's awesome.
Appreciate you, man. So I had to double check the date because I didn't know this. August 2013 is when I got into mortgage.
Wow.
Rates were 4%, and they had just increased from 3.8% the year before. So people freaked out when they went from 3.8% to 4%. Had no idea what I was doing. That was 11 years ago. And then I think we met, I think it was 2015.
Yeah, something like that. 15,
Early
16
2015.
time frame.
I definitely had no idea what I was doing when I was
Sure.
doing your loans, and you let me know that.
Forgive me. I should have been kinder. You're a gentleman. You put up with me. Thank you, sir.
You're amazing, dude. Give us a quick rundown of your journey just in real estate, super quick.
So February 2003 is when I started selling new homes. I was 23 years old.
Yeah.
Did that for 8 years, selling new construction on site. Sold about 500 homes before I got my lobotomy and became a realtor.
Lobotomy. What a phrase.
Yeah, need a brain transplant to do this long term. Since then, I've sold almost 3,000 homes, and a lot's changed in that time frame.
Yeah.
So it's pretty crazy. So you mentioned something when you said they were 4% then.
Yeah.
If memory serves me, I think rates were in the 6 to 6.5 range at that time when I started. And we'll find out if you can navigate that site. It's either Freddie Mac or Fannie Mae. I think it's FreddieMac.com/PMMS, Primary Mortgage Market Survey. Those aren't correct rates because that's wholesale rates. They don't show what retail rates are that the buyers get, but it's a good indication for trends.
For sure. 100%.
What's going on?
While he's looking that up, let's talk about, it always pops up, so I might as well just bring it up anyways, current mortgage rate trends. And then I want to hear your perspective on how rates are affecting homebuyers on that too. But
Sure.
So ultimately, I'll just kind of give a 20,000-foot view on what goes into rates and what's going on right now for people that don't know. So the Feds control short-term rates via the federal fund rate.
Yep.
And whenever inflation is high, the Feds want to typically control spending to slow down inflation, and they do that by increasing that federal fund rate and making it more difficult to take out short-term credit. So to slow down spending, right, is the whole goal on that. So typically on there's a gap between the 10-year Treasury and the 30-year fixed mortgage. And why that's important is a lot of people think that, and you very much know this, we've had many talks about this, but a lot of people think 30-year fixed rates follow the federal funds rate, and they don't.
They don't. They follow the 10-year Treasury. Well, exactly. Most of the time they follow the 10-year Treasury.
Yep.
They don't when the government is doing buying mortgage-backed securities. Not the government, forgive me. When the Fed is buying mortgage-backed securities like they were doing during quantitative easing, it didn't follow the 10-year Treasury
100%.
Because they were artificially driving them down.
Right. Yep. And there's always a gap between that, right?
Always.
So there's always been a gap between the 10-year Treasury and the mortgage rates, 30-year mortgage rates. So in 2022, the 30-year rate was at 3.7% on average, and the 10-year Treasury was at 1.8%. So that's a little bit less than a 2% gap, right?
That's right.
So today, in May of 2024, the 30-year fixed was at 6.8%, and the 10-year Treasury was at 3.7%. So that's almost a 3% gap.
Yeah.
So what we're seeing right now is the Fed rate. So it's compounded, right? So
it's usually double.
Yeah. Yep.
Yeah. Whatever the 10-year Treasury is, it's usually around double as what the 30-year mortgage rate typically is.
Yeah. Well, even when. Yeah, so we're seeing a compound on that because the 10-year Treasury is high because the Fed rate's high because the Feds are trying to slow inflation, and then also that gap is really wide on there.
Right.
So the whole idea of interest rates will come down when inflation comes down, I do think that'll follow. And then also I think inflation rates, will also come down as the economy, as people, not necessarily investors, but as the economy starts to.
Why do you think that? Why do you think rates will come down?
Well, inflation needs to eventually come down.
Okay.
Sometime.
Okay. Are you are you sure that they're correlated that way?
So if we look at history, I have my crystal ball can be broken.
Mine's foggy. Mine's not broken. It's just foggy.
I threw mine in the trash, man. It sucks.
Yeah, kind of useless. It's about 50-50. One flip.
So if we look at historical averages, so the historical average on the gap between the 10-year Treasury has been, when I checked it was 2.1%.
Yes.
So anywhere ranging from 1.6 was the lowest I could find back in 40 years.
So it's higher than it's been.
So it's the highest it's ever, I won't say the highest it's ever been. The only time that we've ever seen it this high at 2.9%, it was 2.8% in 2009.
Yeah.
The whole, real estate crash.
Yeah.
So I've heard some people make this. I've heard some really smart, educated people that are, almost like too smart, for their own good. This guy make the argument that because of that gap, it's very similar to 2009. And what I did I did a pretty good amount of research. I know you have some feelings on it, so I want to hear them.
Yeah, I'm a nerd too. I do the same research. I read the same stuff.
I love that. That's
why I'm a dork.
That's why we get along, and we argue so much about stupid stuff.
Let's be honest. None of us really knows, but
no,
our perspective based on our experience and the data we're seeing, is what we're discussing.
100%. Right. So I think the gap from what my research showed is the gap from 2009 between the 10-year Treasury and the 30-year fixed was predominantly due to investor uncertainty. Investors were unsure what was going to happen. There was a lot of just uncertainty on the investor side of things. From what I can see right now, it's not so much on the investor uncertainty. A lot of the investors seem confident from what I'm seeing on some different metrics on there. It's really more so about civilian, non-investor, just normal people uncertainty because such a large spike. There's so much movement.
You're talking about buyer motivation or interest rates?
Ultimately, it's going to be buyer motivation affecting that gap.
Okay, so I see it from a different point of view.
Tell me.
So from my point of view, if you just let rates go and the free market drive them, they're going to land in the 6 to 8% range because mortgage-backed securities they're an equity like anything else. And for investors to be motivated to buy them, or hedge funds or whoever, pension funds to buy them, there has to be an adequate return.
Right.
And if rates are below that 6 to 8% range, none of the primary free market's going to be buying them.
Yeah.
So you're not going to see those rates come down below what the market will pay unless the Fed steps in with quantitative easing and begins subsidizing the market. So the real question is not, will rates go up or down? The real question is, what incentive does the Fed have to monkey with the market? That's how I see it. Yeah. So if the Fed decides to start quantitative easing again, like they did coming out of the meltdown, because they had to shore up the bank's balance sheets, they had to stabilize the market to keep it all from collapsing. If they decide to do that, that will drive rates down because now they're the major buyer and it's not an incentive for the markets to buy mortgage-backed securities.
Yeah.
So from my point of view, there's no incentive for them to do that. That would simply drive inflation higher. It would bubble the market again, like it did. And they don't have an incentive to do that because home affordability is at an all-time high.
Yeah.
It's harder to afford a home now than it's ever been in the history that the data's been tracked. So for that reason, that's what the Fed wanted. That's why they did this, because they had to cool it, because they had to juice the market when COVID hit
100%.
to keep it all from collapsing with all that volatility.
Yeah.
So for me, it's less of the market-driven data that you're going over, and it's more of the political-driven. What is the Fed going to do and why? And I just don't see any incentive for them to do that. It would be the opposite result of what they're trying to accomplish.
Yeah.
What are your thoughts?
I think you hit the nail on the head with the political statement. And I think whoever gets in office...
Yeah, and I don't mean that left or right.
No.
The Fed is independent of that, and people
100%.
need to understand that. They need to understand the Federal Reserve is a private corporation that controls the money in the world, and they're managed by the Bank of International Settlements and the International Monetary Fund. It's a big banking hierarchy that the governments don't control. It's not about the left and the right.
On whoever the Fed chairman is.
Yes, but they don't make the decisions.
They don't. I agree with that.
I'm not trying to be like a tinfoil hat conspiracy theorist. The reality is the bankers run the world, man. I mean, I learned that very clearly when COVID happened, because I thought the market was going to collapse when they shut everything down.
Yeah.
You turn the economy off for a couple of months and you flip a switch back on. I'm thinking, man, this is going to be '08 all over again. Shows what I know. My crystal ball is foggy.
Yeah.
The market shot off like a rocket. Why? Because the Fed drove rates down.
Yep.
They knew they needed to do that because of the shutdown.
Yeah.
And boy, real estate prices went through the roof. The opposite of what I thought would happen.
Yeah.
Then they drive rates really, really high.
Well, yeah, they did QE, quantitative easing,
Yep.
and they said, "Oh, we did too much. We need to do quantitative tightening now." And then they went and did that, and then now they're trying to roll everything off the balance sheet.
It proved that the market doesn't control real estate. The banks do, using the interest rates. That's what determines how this works.
That's good.
And I learned that very clearly in COVID.
Yeah.
It became so evident the Fed controls the entire world.
Yeah.
Actually, it's not the Fed. It's the International Monetary Fund and the Bank of International Settlements, and the Fed is underneath them. But it's that group of elites that run the banking in the world.
Yeah.
And, man, they can pull the strings anytime they decide.
Yeah.
And wherever they want it to go is where it's going to go.
Yeah. On a more serious note, I went out and shot guns with a guy from Switzerland.
Wow.
And he said, I came to Texas, so I want to shoot guns, and I want to get a... Jay, feel free to edit this out. I want to get a MAGA hat, and I want to shoot guns.
Dude, I got a funny MAGA hat story. One time I went to, we went on vacation to Hot Springs in Arkansas. Arkansas is a big Democrat state. And I wore my big red Make America Great hat again.
Yeah.
And you could tell the waitress, it was a lady you could tell she was a Democrat. And when she came over to take her order, she looked at my hat and her eyes got big. Like she couldn't believe I was wearing it. She had clearly listened to all the media that said that Trump was Satan. And like, oh my gosh, this guy likes Satan. It was the funniest thing ever. My friends made me take the hat off. And I did. I obliged.
I'm shocked you actually took it off.
Yeah, it was just a
for you.
joke. I didn't really care. I'm not really a Trump supporter.
That's awesome.
I'm a conservative guy, but
Yeah.
God will decide how all this plays out.
100%, man. All right, let's share. I don't think we ever share like funny stories, so let's share a couple funny stories.
Sure.
I was trying to figure out. Obviously, I wouldn't say the buyer name on here. I want to say it was one of your buyers, but I couldn't confirm it before this. It was earlier in my career, and I didn't explain things as well as I do today. I've learned a lot.
Haven't we all?
When you buy a house, you have an escrow account, right? You include your taxes and insurance in the mortgage payment. Most people do that.
Yeah, majority.
So on the closing statements, you prepay for home insurance.
Right.
So
For the first year.
Now, how I explain that is I say, hey, you're going to prepay for the first year. You're going to continue to make payments every month. That way, whenever they go to make a payment next year to the insurance company, the money's there. Well, I didn't say that this time. And after the buyer closed, they expected to pay $200 less per month because they thought that their insurance was
already
prepaid.
paid.
So I didn't have to
Good.
pay it for my mortgage.
Oh.
So that was a very expensive mistake
Wow.
that I made. So thought that was pretty funny.
Yeah.
They actually left a bad review that I lied to them about their payment,
Oh, wow.
and I had to make it up to them.
That wasn't my
afterwards.
client.
So, no,
No.
you would have remembered that.
I would have remembered that, but I also would have explained it to them myself, and they wouldn't be leaving you a bad review.
Man, you do such a good job at that, at like explaining, because like so many people now.
Because I break down what is included in the payment when
Yeah.
we do the buyer consultation, when I first meet with them, and I show them how it all works.
Wait, you do a buyer consultation?
Yeah, of course.
What's that?
How can I know what's important to them and help them understand the process if I don't? That's where you sit down with your clients, talk about their goals,
Yep.
set expectations for what the market will bear
Yep.
before you get started looking at houses. And it's also when you ask them to hire you and
Yep.
enter into a written agreement that they're going to work with you.
And you have a leg up because you've been doing that for like 500 years.
Yeah, I'm getting old, man.
And
Getting
a lot of these
little
other
bit of gray
people
coming in.
with all the NAR stuff, a lot of other people, a lot of other buyers agents are doing that for the first time, and they're
What's
scrambling.
funny? The new paperwork came out, the new listing agreements.
Oh, I haven't seen it.
And for that, and it's like nothing's changed. We did a whole podcast on the NAR settlement, and I said, yeah, it's going to be negotiable now, so it's going to be so exciting, right? And now nothing's changing.
Seriously?
Everything's happening the same. The only difference is it's not going to be advertised on MLS, but the seller is still choosing what they're going to pay the agent. It's still in a written agreement. It's still going to be
Really?
part of the process. Nothing's changing in Texas.
So the buyer agent commission is still written in the listing paperwork?
Yes, of course, because the seller has to agree what they're willing to pay or not pay. I mean, I knew it wouldn't be what they said it would be. I hoped for some more changes.
God, you're so smart, Danny.
But
there's so many people that, including myself, I was like, "Oh my gosh, the world's gonna end." We had no idea.
I'm not so smart. I'm just practical.
Yeah.
I just look at things pragmatically and go, how is this going? What is likely to occur? Cause and effect.
Yeah. Love it.
So, what's likely to happen here?
Yeah.
People still need to sell. People still need to buy.
Yeah.
There still has to be a marketplace.
Yep.
How's that going to shake out?
Yep. 100%. All right. So you've been in this for a while, so you got to have a good story. So what's a good quirky story you can think of?
What kind of story would you like to hear?
Something just outrageous and.
Well, let's think. Okay, so in 2006, I was working for a home builder called Ryland Homes, and a good company. They were the 8th largest publicly traded builder in the market.
Yeah.
They've since been acquired. They're now owned by Lennar. But I was the top salesperson nationwide. I'd sold more homes than anyone else in the whole nation. And the last day of the year was New Year's Eve. That was also my birthday. And I had an appointment to sell a home, and I had sold 99 homes that year. And man, I was so excited. I wanted to get to that 100 and break triple digits. I mean, that's hard to do. And this year was like red hot. This was before the market collapsed in 08. And when I was leaving the house that day for work, I told my wife, I'm bringing the checkbook to work because if this client that I'm meeting doesn't buy, we're buying a house because I'm hitting 100.
Yeah.
That's my first year to sell 100 houses.
No way, because you bought your own 100th
house?
No,
the appointment showed and bought. I didn't have to, but I was prepared to. I was going to. Like, if necessary.
Dang it, I'm going to do it.
If it was necessary, we were going to buy an investment property from Ryland.
Love that so much, man.
It was like, dude, we're getting 100. Like, I'm already at 99. We're getting 100. This is happening.
That one story somehow, like, summarizes you perfectly.
Yeah,
I don't know.
It does. I'm a bit of a weirdo.
Whatever it takes, man.
Yeah, whatever it takes. Let's have some fun. Let's make it happen.
All right, so I figured we could talk about first-time home buyers for a little bit. So,
Sure.
Wanted to give just 3 quick tips on, first-time home buyers navigating mortgage, and then I'd love to hear 3 essential tips for first-time home buyers on the buy side. After that.
Sure.
So, if I were to say 3 things, I would say talk to a lender early in the process, and I think now more than ever because there's so much fear of payment and budget tightening, and everything's more expensive, including the house. So talking to a lender as early as possible. I'm actually talking to people most of the time, at least 6 months, sometimes 12 to 18 months is what I've I've looked back, right?
Yeah.
People that I thought maybe weren't serious 18 months ago are actually buying now,
Right. People take time.
Yeah. Number 2 is don't have limited beliefs about any concerns. So if you have any payment limitations, if you have any cash to close or down payment, there might be some solutions to those. And I'm we're gonna have a real candid conversation and figure out what is your actual monthly payment limitation. What does that look like over the next 4 years? And then down payment. There's some really good first-time homebuyer grants and stuff like that we're actually doing one right now.
Yeah, really cool program.
And buyers bring in very little to closing, so it's super good stuff out there. Third one is make sure your realtor, I think more than ever, is super, super sharp. I've never seen such a gap in a quality realtor and not awesome realtors as I have today, meaning agents that either are new to the market or almost even worse than this is a controversial, maybe a hot take on this, but I think even agents that have been doing this for a long time but don't do a lot of production, or they have a false sense of confidence, they're not in tune with the market, and they're not seeing the changes. Obviously, unlike you've been in the market for a long time, and you also do a ton of production, so you have the experience, and also you have the touch on the pulse on the market. And then my bonus tip, I would say, is interview multiple LOs and interview multiple realtors. And I think a good realtor and a good lender isn't scared of that because they're going to find. I would love to talk to. I would actually rather talk to
I disagree with you. I don't think it's necessary to interview multiple. I think it's necessary to find a referral from a trusted source and work with someone like, and trust.
100%. I agree. If you have a referral, I 1,000% agree with you on that.
If the best way to know if someone's good is to get a recommendation from someone who used someone good.
Yeah.
Because people won't recommend people that didn't do a good job. How often does someone say, hey, who do you know? And if you didn't like your experience, you don't refer them.
100%.
But vice versa, if they were great, you'll refer them.
Yeah.
So I would say the gap in realtors on your number 3 item is experience.
Yeah.
And I'd say when choosing a realtor, number 1, never use a realtor who hasn't personally bought a home and sold a home. If they don't have the experience of going through the process as a buyer and as a seller, they probably don't know how it feels.
Interesting.
So that's the number 1 thing I'd look at. How
Yeah.
many homes has this person personally bought and sold?
Yeah.
Do they know what I'm going through?
Yeah.
Because if you go to a doctor and they've never done surgery on someone and you're the first one, man.
You don't want to be the first one.
Yeah, I went to medical school, but hey, you're my first patient. I don't know, man. That's how I feel about realtors who haven't personally bought and sold houses. Have they flipped homes? Have they lived in a luxury home? Have they lived in an entry level home? Have they sold and bought at the same time?
Yeah.
Have they experienced that? That means a lot.
Yeah.
Then the other thing is, according to Texas Association of Realtors, the typical agent in Texas sells 9 to 12 houses a year, depending on the year. That's not a lot of experience.
Is it that high?
Yeah, it is, because typical is based on the survey, where they just survey a whole bunch of random agents. And so when they look at, you got people like me that sell 100 to 200 a year, depending on the year.
Yep.
You got people that sell 1 or 2, that are part-time. So, but your typical agent is doing about a transaction a month.
Yeah.
That's just not a large base of experience. So
I thought it was closer to like 4 or 5 a year, by the way.
So my recommendation, it can be in some tough markets.
Yeah.
Whenever the market's receding like it is now.
Yeah.
But ultimately, what I'd say is I would want a realtor who has personally bought and sold a home.
Yep.
And who has personally sold 50 homes. At that level, now they have enough experience to have seen a lot of different things, and they can guide you. And they're not a flash in the pan, just got started.
100%.
So those are the kind of the criteria I'd look for after getting a good recommendation.
Yeah.
Because a referral is the best way to find someone.
Yeah.
And you want to work with someone you know, you like, and you trust.
100%.
Because this is a big transaction.
I agree. That's great. Well said, man. and to be clear, I think if you don't have a referral, that's when I think you find someone. Basically, just find someone that keep finding people until you find someone that you trust. Like
Absolutely. And if you don't feel good about it, they're not adequately explaining things. They're not teaching you so you understand.
Yep.
They're just telling you things. Man, that's hard to swallow. You don't do this every day. So I'll piggyback on that. Your third item would be my number 1, choose an experienced agent. My second would be try to think a little bit longer term than your current situation.
That's good.
Because most people get a narrow point of view. This is where I'm at now. This is what I can afford. But your career is going to progress. Your life's going to change.
Yeah.
Circumstances are going to be changed. So I see a lot of clients real concerned that this has to be a forever home.
Yeah.
And I help them. I try to help them think, all right, if this doesn't work out, no big deal. We can just sell this. Maybe not right now, but in a couple of years, we'll just sell this house. 3, 5, 7 years. Your typical first-time buyer doesn't stay very long, because most first-time buyers' life changes. Seasons change, careers change, family situations change.
Right.
So try to think like that. Try to understand my life's not going to be the same 5 years from now than it is today.
Yeah.
And that's something I see first-time buyers sometimes struggle with.
Yeah. Focus on the today, not the long term.
And the last thing I would say is, consider new construction when you shop.
Yeah.
Because they may seem higher and more expensive, but the cost of ownership is important. And when you buy a pre-owned home, you have a lot higher cost of ownership and maintenance and ongoing things.
Utilities too. I mean, utilities are significantly
Energy
higher.
efficiency, brand new roof, brand new HVAC, brand new appliances, and the home's updated. And they're usually new construction on the outside edges because there's no infill areas, so you got to drive a little bit to get them. But they usually have good school districts because they're building in new areas.
Yeah.
So there's a lot of advantages to it. So I always suggest to folks, if you can afford it, in the area you're in, always consider new construction as well.
Yeah.
Those are my 3 first-time buyer tips.
Love it, man. What's something that you wish that lenders would explain better to clients? Lenders overall. So you can give me my personal feedback later on. Crap on me later, but
No, man, you're great. I wouldn't be sending all my clients to you. I don't have any room for improvement for you. You're freaking awesome, Shane. Keep it up.
Thanks, man.
What I appreciate about lenders is a humble approach and understanding. And what I mean by humble is understanding that buyers don't do this every day, and slowing down and explaining so they understand what the options are and why is real important, because most lenders just say, this is what you qualify for, this is what we're doing. And I value my clients understanding what all the options are and why a certain loan choice is the best for them based on their situation. Because then they feel comfortable and confident moving forward.
Yeah.
That's what I value when a lender does that. You call it a high trust interview.
Yeah.
And those are very valuable because you take them through, you explain it, they understand. And when clients understand, they feel comfortable and confident, and it's a lot easier for them to pull the trigger and move forward.
Yeah. Awesome, man. That's great. Yeah, and I figured if there are any first-time home buyers that are watching this, figured just kind of real high-level break down the lending process from application to close.
Yep.
So first step is we do some kind of initial conversation. I call it a dreams and goals call. We just figure out, number one, does it make sense? Are we in the right ballpark, right? Is this something that it's a 5 to 10 minute call, and we just talk about, are we in the right ballpark? Is this good use of your time as a buyer to go through and take 15, 20 minutes to fill out all this stuff, right? Because it's a commitment of your time as a buyer. So I spent some time kind of vetting them out, seeing that's a good fit. Next step is typically we 80% of people hop online, fill out information on our secure website. Sometimes they do it over the phone. Most people actually prefer to do online nowadays.
Right.
So that's second step. Third step is we do high trust interview. I've just kind of changed my process to do really kind of like a buyer consultation, right? More of, I kind of stole that from you. So thanks for that. So we called it a pre-purchase consultation. And I actually literally have a 25 slide deck that I go through with buyers. And we go through everything as far as what affects interest rates, what affects real estate prices, just the steps in the process, what could go wrong, what to avoid.
Sure.
What is a buy down? What's a temporary buy down? Even though they might not do it.
Yeah, you're educating them on the process.
Exactly. Kind of slow down to speed up kind of thing,
That's
right?
Great.
That's the third step. Fourth step, then they start getting their documents uploaded. From that point, we actually do things a little bit different. We've been doing this for a while. We actually send them to underwriting up front before they find a house. So that way there's no surprises down the line. We know exactly what the game plan is.
And that I appreciate about you guys a lot.
Yeah, I appreciate it, man.
Yeah.
We got to do it anyways. And we pay for these underwriters, and they're picking their nose because loans are down. So might as well put them to work, That's my thought on it.
When the market's hot, you don't have the resources to do that, but now it's great.
Well, when it's hot, people are making offers the same day that they come in. And
before it's like, just choose me.
Yeah, exactly, man. Next step is find a home with awesome realtor like Danny. After that, we do a rate lock consultation, go through and educate them on rate lock strategies. So do we lock the rate or do we float the rate? Kind of pros and cons, educate them on that.
Yep. What makes sense?
Yep, that's it. And then get the appraisal done, get the final underwriting approval done, where the underwriter is like the not friendly auditor, where we're like the friendly auditor. We're going to put the lipstick on the pig. The underwriter is going to smear it off and show it what it is. So we want to get ahead of that and make sure there's no surprises on there. And then closing. So closing day, sign your life away.
So as you went through that process and explained the step-by-step process, the answer to the question you asked me before just came to me.
Okay.
What do I wish the lenders would do better with our clients? You glossed over step number 4, like this is just something we do. But step number 4 wears our clients out.
Underwriting.
No, the documents.
Oh, the documents.
All the documents they're required to provide.
Yeah.
They don't understand that. Why are they asking me for this? Why are they asking me for that? I get that call so often. They're like, man, they're inspecting my colon.
Yeah.
Like they don't understand that ever since Dodd-Frank was passed and mortgage was re-regulated, that underwriting is extremely strict.
Yep.
And they have to verify everything. And the sources of verification will shock you how invasive and intrusive it is into your life.
Yeah.
I wish you guys would spend more time letting them know what an ordeal that
100%.
is.
100%. And that's something I know for a fact.
That shocks first-time buyers.
Yeah.
Second and third-time buyers, they've done it. They understand.
Yeah.
But first-time buyers, they're like, whoa. Like, why are they asking for that?
Yeah.
That's none of your business is how they think.
Yep.
And what they don't realize is that the underwriting has to be able to pass an audit. Otherwise, they won't continue to be able to lend money.
For sure. And frankly, that's something that I need to improve on still.
Yeah,
we touch on it, but still I need to get better at that.
That's the one thing that surprises buyers often.
Yep.
100%. And no matter what we tell them, it's still a little bit uncomfortable when they start getting the conditions list. And the initial group of paperwork is they think I did this already.
Yeah.
I already sent all that stuff. Now they're asking for all these supporting follow-up things.
Yep.
When the underwriter comes back and says, okay, I received your file from processing with all the stuff the loan officer asked from me, but I also now need to verify X, Y, and Z.
Yeah.
And then you go back and ask for more, and they're like, I already gave you. What's the deal? They think they should be done after that initial round of documents you asked for.
Yep.
And they don't realize they're going to get picked apart.
Yep. So
that's not that's important for the audience to understand. That's not like, hey, this lender is doing that.
yeah.
All lenders that fund Fannie and Freddie loans are under the same microscope.
Yeah.
Yeah.
Thanks for clarifying that. It's not just me. So something that we're actually rolling out is, and it's so simple, but I've tested a couple times. I've already gotten good feedback from it. We just need to get our team completely trained up on it. Is every time we ask for a document, we explain what we acknowledge a similar document that was sent, and this is in every single request, and then we also reiterate it via text and over the phone.
That's good.
And we brought that back. We got away just being transparent. Just we thought people didn't want phone calls as much.
They do.
I think more than ever they want phone calls now
do.
more.
Yeah.
They want a more humanized experience. So
Sure.
So we're following it in an email, text, and phone, and it's an acknowledgement in writing. Hey, I know you sent over this previous bank statement for Chase ending in 1234. We saw the large deposit as a result of that when you sent it in. This is why we need it, because of the Patriot Act, and you need to show a paper trail. And
The why makes people feel so much more comfortable.
100%. So that's something we're going to implement that I feel really passionately about. And again, we've already gotten good feedback. We already know it, and our people are amazing, and they know how to explain it. It's just getting a system in place to be able to do that.
Yeah, and buyers are usually stressed out. The process is a little overwhelming to them.
Yeah.
Anyway, so that stuff, they get a little bit more. They're a little more on edge because they're going through a stressful experience. So
For sure.
The why really helps.
Yeah, 100%. What do you think? What's your analysis on the real estate market right now overall, and just how it's shifting?
It's cooling significantly. Days on market are climbing. Inventory's climbing. Even with price reductions, houses are sitting longer than before. Overall, it feels like we've used up all the buyers that are in the market. And the last time the market felt like this was 2018.
Yeah.
2018, rates had climbed up above 5, and things really cooled. And it became a grind to sell. For the first time, I'm seeing that again.
Yeah.
I'm beginning to see days on markets tick up.
Yeah. Another colleague in my office has, I think we talked about number of approved buyers last time. So my number of approved buyers is increasing. Closings are still pretty flat, but number of approved buyers, I have about.
The other thing I'm seeing too that's unique is buyers have gotten very, very picky, meaning they're making an offer, and if you give any counter and you don't take their offer, they flake out. They're not sure. There's not buyer confidence like there used to be. Like, I had a house listed for $575. They offered $550 and wanted $5,000 in closing costs plus the seller to pay title, and they wanted the seller to have the septic tank pumped. My client agreed to everything. Said, I already pumped the septic tank a year ago. I'll give you a $25,000 price decrease, and I'll pay your title, but I'm not pumping the septic, and I'm not paying your $5,000 in closing costs.
Jeez.
And the buyer walked away. I had another offer. Buyer comes in.
List side. Okay. Have you had any of this? I'm sure you have.
Yes, I have a buyer this past weekend that behaved the same way.
You're representing the buyer.
Yeah, let me tell stories, because stories help people understand.
Okay.
So another seller, house is listed for $550. It's in move-in condition, but it's outdated. Buyer offers $500 and wants $15,000 towards closing costs.
$520,000.
$500, so $50,000 off the list price,
and $20,000
and
towards
$15,000 towards closing costs, plus the seller to pay title.
$65,000 difference in net to the seller.
That's their offer. We counter at $525 and agree to pay the $15,000.
Wow.
And they decline and walk away. I show a client a house this weekend. House is listed for $475. We offer $465 and ask for $5,000 in closing costs. And we ask them to pay for title. We ask them to pay for their lease back.
Yep.
We ask them to pay for survey, all the normal things.
Yep.
a buyer-sided contract.
Okay.
Seller counters back. We'll do all of that if you'll come up to our $475 list price. Buyer walks away.
And what was the seller credit that you're asking for?
$5,000.
So you came back. It was essentially a $15,000 difference in net.
Right.
Net to the seller.
Right.
So you as a buyer, I'm rewording it. So you as a buyer were asking the seller to take a $15,000 reduction.
That's right.
And then they came back and said, we'll take a $5,000 reduction.
That's right. And
Still
they
a
had,
good deal.
And they had another offer on the table, but they were choosing us. And my client said, nope, sorry, let the other buyer have it.
Wow.
Yep. The buyers are very, very payment conscious because it's hard to afford a house right now.
Yeah.
So the buyers are being picky and can be because there's plenty of houses on the market.
Yeah.
So what I've learned is sellers need to take the first offer or they're not going to sign it.
That's good, man.
If they want to sell. Now, some of them don't have to sell, and they're like, fine, if you want to pay the price, I'll hold my house. I had that conversation with a seller this weekend.
Yeah.
We started at $550. That's what market was when we listed last year. We couldn't get anybody to pay more than $520 at the time. Worked 2 offer negotiations. Numbers didn't work for them. We took it off the market for 30 days, came back on in the spring. This time, we came in at $539. Now I'm at $519. And the buyers just aren't there. The market's down around 500 now. So the market's finally settling down and prices are coming down.
Yeah.
And that seller's probably just going to take their house off the market and keep it and lease it because they don't need to sell. They wanted to sell. It's a second home for them.
Yeah.
So what we're learning is the market has fully shifted. It is now a buyer's market.
Whee! It's great for me as a lender.
And by the way, this is across the board in several submarkets. One was in Hazlitt, one was in Burleson, one was in Mansfield, one was in Duncanville.
Yeah.
So the surrounding perimeter of Tarrant County on the outside of it, all across the board, same results. So this is the market. This is not a one situation.
And I'm seeing the same
And the
thing.
buyer I was making the offer with was in Arlington. So it's everywhere.
Wow.
It's all over the place.
Well, in Flower Mound, where I live in Flower Mound, in my neighborhood, I've seen multiple houses go on the market and sit, and it's good price points as far as first-time home buyers, man.
Yeah, and there's inventory. So what I feel like has happened, because these rates are not new. They've been around in this same exact range for quite some time.
Yeah.
During COVID, there was a lot of buyer demand that couldn't buy a house. And all those folks that got shut out because they couldn't put down 30% and waive appraisal and give their left arm and a boat and a pony to get a house. All those buyers were buying over the last couple of years as rates were coming up, and all those buyers are now exhausted.
Yeah.
And the market is just very slow.
Yeah.
There's not a lot of buyer activity, and we're seeing inventories climb.
For sure.
It's now a buyer's market.
And we're starting to see...
And people need to hear that.
100%. And as far as the current state of on the lending side, I mean, we saw in June 2024, Mortgage Bankers Association said that there was a 15.6% increase in mortgage apps.
Wow.
So I think that...
There's a lot of people that would like to buy, but they can't afford the house
Correct.
prices
So
at these rates.
Exactly. I think you
There's
hit the nail on the head.
plenty of qualified buyers.
Yep.
They won't spend this much money in an economy that's receding and inflation's rising and everything is costing more and they have less disposable income. They're not going to bite off that chunk, man.
Will be more conscious. I have a buyer that they just got they're getting a $20,000 gift. So just got the great news. Praise God, $20,000 gift from someone. That's amazing. They were approved before. Then they got the $20,000 gift. And then they got a raise. They got a 5%. Both got a 5% raise.
Yeah.
So now they can approve from $375,000. Now they're approved for $425,000. So they bumped their approval up from their search from $300,000 to $315,000. They're like.
And that's because people have to actually be able to make the payments.
Agreed. Yep.
Just because you qualify doesn't mean you can afford it.
Yep.
Doesn't mean you can afford it with your current lifestyle.
Yeah.
And people are just being cautious and wisely so.
Which is good.
Yeah. So we're seeing the market settle. Prices are coming down a little bit.
Yep.
They actually are finally coming down. Now, when I say coming down, they're not plummeting.
No.
They're not going through the floor.
They're
not
settling. I think you
They're
use that
settling
term.
back into where they should have been pre-pandemic, but not back to pre-pandemic prices. There's still demand. Prices are still stable.
Yep.
But they're settling into where only the cream puff best properties are selling above market.
Cream Puff Properties. That's like a Danny copyright on that.
Oh, I got
the
that
Cream
from
Puff Properties.
I actually got that in a training class from a company called Ninja Selling.
Yeah. Love that. Love that. So yeah, I think a lot of what I think just be careful how we're looking at statistics, right? When we see the 16% increase in mortgage applications, that sounds
Well, here's the reality. All those people want to and need to buy a house.
yeah.
And they will someday.
Yeah.
So there will come a tipping point. This isn't going to last forever.
Yeah.
It's not like this is going to markets never stay the same very long.
Yep.
We think how it is how it's going to be, but it's not. Something will change, something will happen, and those buyers will be in the market. I just don't know when. Will it be this year? Will it be 25? Will it be 26 or 27?
Yeah.
Okay, so let's turn the tables. Let me ask you the question.
Oh, do it.
What's something that you would like to see realtors do different?
Oh.
What's the problem you get from us on the applications and clients we send you?
I'd say two things. I know we've touched on both these, I think. I think the two things that I would say I wish realtors would do more of is do a buyer's presentation up front, either before the first showing or after the first showing. Do one free showing.
Instead of meeting them at the first house.
Yes. Or do your one free showing and then do it, right? I know sometimes that's hard to do and you want to build rapport. I get that. But just doing a buyer's presentation and setting the expectation then, because otherwise the most common scenario, I don't know the statistic, I'm making this up, but if 80% of realtors don't do a buyer's presentation, it's probably much higher than that.
Do you know why? You know why they don't? Why do you think they don't?
So I think they don't because it could be a number of things. They don't know how to do one. It's too much work, and or they're afraid that they're going to scare off a buyer with telling them information.
It's the last one. So buyer's perspective is the way the process works is I look online, and when I'm ready to walk through one, then I call an agent. I'll worry about qualifying later. I'll worry about if I want to buy it later. They think it's voyeur to show, then start the process. Buyers don't see the process as talk to a lender, talk to a realtor, then look, then show. That's not how buyers behave. Buyers get on Zillow. Ooh, honey, look at this one. Ooh, I really like that one. Let's call the agent. The buyer sees the perspective different than us. So the skill it takes to convince a cold lead that just called you to do the process the opposite of the way that they want to is not a skill every realtor has. So that's why they don't do it, because it's easier to just show them the house. You want to see a house? Sure, I'd love to meet you. Off we go. Make sense?
100% makes sense.
But I don't work with any of those kind of clients. That's why mine are all buyer consultated first.
Yes.
You call me and want to see a house, I go, awesome. The first step is for us to meet and talk about your goals.
Yep.
No, I don't want to meet. I just want to see this house. Great. Who's your agent? Not me. No, that's not how we do business.
Yep.
Now, if I know you, we have a relationship, we've worked together in the past, and you call me up and want to see the house, I'm scheduling as soon as I'm available.
Yep.
But not if I don't know you.
I agree. I think that's so powerful, man. I think because the issue that I think you run into is if I'm going to say 90% of realtors don't do a buyer presentation, and then you have
the buyer's point of view is the issue.
Correct. Yeah. Well, then and that's compounded when 90% of the buyer's agents don't do a buyer presentation, and then we'll be conservative. We'll say 90% of lenders don't do any kind of buyer presentation.
Right. Here's the application. Here we go.
Oh my God. Then you have a buyer that has no idea what's going on.
Yeah. You and I are the weirdos.
Yeah.
We're not
100%.
the norm.
Yes.
We're not the norm.
So then you flip that on, and then you have either a realtor that just does the buyer presentation or just a lender. And that puts a lot of, I think it's kind of, I'll say kind of a lot of stress and pressure on that one person. They're a weirdo. For both weirdos together, the buyer, they have a better experience there.
Now, I honestly, there's a lot of my clients now that I don't do buyer consultations with.
Yeah.
Because they've worked with me 3, 4, 5, 6 times. This is not the first rodeo. They know we have a great relationship. And for them, okay, we're calling Shane again. Oh, we're still using Shane? Absolutely. Shane's great. He's still doing this. He isn't in the Bahamas yet.
Working on it. So I have an interesting, so I have a client, so I've helped I helped the buyer, helped the wife with her first purchase before she was married. Then she bought another house. She bought another house with her husband. Her and her husband bought a house. And then now they are buying a third house. So I called and I said, hey, we got 2 options. I can give you the abbreviated or I can give you the deep dive. I'm doing stuff a little bit different. And the wife said, she's in title. She said, sure, just give me the deep dive. And the husband said, well, hold on. I bought a house before and you helped me. You did great, Shane. But I've never sold a house and bought a house. This is totally different.
Yeah, it is.
Talk to me like I know nothing.
Yeah.
And then she was like pulling her hair out because, it's, but he, so I've kind of taken that. I learned something from that.
Yes.
This is 60 days ago. Like every transaction's a little bit different, or maybe it's a divorce, unfortunately, right?
Absolutely.
And you're helping people through a divorce. That's different than the 5 houses that they bought.
Yeah, what I tell people all the time, no 2 transactions are the same.
Yeah.
No buyer and seller combinations are the same. There's no markets the same. There's no houses the same. There's so many variables. Real estate is not a cookie cutter process.
Yep. Agreed, man. I'd say the second thing that I wish realtors did more often, and it doesn't have to be me. I hope it's me. I wish it's me, but it doesn't have to be me. Is I'd say 2 parts to this. Part A is not getting their buyers to a lender early in the process and doing it when you find a house.
Yeah.
That's I think the craziest thing you could do. Number one, you're doing a disservice to yourself as a professional and your family, because you're saying yes to someone who might not be a real buyer. And then 2, you're also doing a disservice to that buyer because they don't know what their payment's going to be. They don't know any of the details of the transaction. They don't know if they qualify or if they want to buy, right? Yeah. So I'd say that's part A. Part B is, again, this is where I hope it's me thing, but it doesn't have to be. Find a lender and have them talk to, not force them to use, but talk to every single buyer, if nothing else. Yeah, and just to reinforce,
I'd say from the realtor's point of view, have a loan officer that you know, like, and trust. Yeah, that has a process. Yeah, and does it the same every time. If you do that, you're doing your buyers a favor. Yeah, yeah.
And there's people that I talked to a guy yesterday. He's moving from Las Vegas. And he's moving over here. He's buying a house. He said, I've talked to 4 different lenders. Who should I use? Or why should I use you? I said, man, I have a process. I have a way of doing business. I think I'm good enough at doing my business for people to appreciate my process. You might hate me. And that's okay. There's 4 other lenders that you've talked to, and one of them are probably good. They're different.
I had a similar scenario like that. And I had a husband and wife interviewing me. And the husband had used me in the past, and the wife hadn't. The wife had her realtor, and the husband had his, and then they got married, and now they were going to decide which realtor from the 2 of them that had used in previous lives to sell this house.
Duel of the realtors. Duel to the death.
And they were interviewing both, and she asked me, why should I use you instead of my agent? And I just honestly said, you know what? I don't know. You should choose the agent that you know, like, and trust, because you're going to be spending a lot of time with them. And the one you click and gel with that you trust is the best choice. So if you trust them more than you trust me, then use them, because that's going to be better for you. I'd be honored to serve you. I'd love to work with you guys and sell your house if you like me and trust me. Yeah. That's what matters.
I bet they used you.
They did.
Because you didn't say, well, let me tell you these 10 value propositions that make me different from every other person.
When you're getting started in real estate, you think that stuff is what matters to people because that's what they teach you in real estate classes and brokers and things. And here's your points of value and all this stuff. But that's not how real estate really works. It's based on relationships and service delivery. Yeah. And can they trust you to do what you say and get the job done? And like you said, have a process and use it.
Yep. Love it, man. Well, is there anything else we didn't cover today you want to?
You tell me.
I'm it.
That's Great show, man. How'd we do? Bang, done.
Yeah, I mean, you can do a little outro. They'll be like, thank you so much for being on top of this podcast. We appreciate you, Danny, coming in, having great conversations. Just like that's an outro.
All right, go.
Well, sweet Danny, thank you so much for coming in today, man. I appreciate you making the flight, the hour-long journey over here to Plano.
I was already over here, bro. Thank you for having me, Shane. I always appreciate you. You're awesome, man, and I hope your audience enjoyed this.
Thanks, brother.
You bet.